Welcome back to Liberty and Finance. It's great to see so many people already in the live chat. We are here with Miles Franklin CEO Andy Schectman. Today is Tuesday, June 25th, 2024. Andy, thank you for coming back for a real live stream on Liberty and Finance.
Good to be here, my friend. Thanks for having me as always.
Our viewers love these live streams because we get to answer questions in near real time as they put them in the live
Good.
stream chat. Guys, if you don't know how to get in the live chat, but you want to be, okay, make sure you're on our YouTube channel. Make sure you're subscribed to our YouTube channel, and then look for the live chat that's right underneath this video, and you can enter your questions there, and we'll try to get them in front of Andy. Andy, I wanted to kick us off with something that's kind of like Back to the Future. 2, 3 weeks ago, we talked about a delegation of huge name bullion bank executives that went to China to have discussions. We don't know about exactly what, but we did notice over the past month that China has seemed to have tapped the brakes on their record bullion purchases, gold in particular, perhaps silver, we don't know, were draining the COMEX at an alarming rate. And the price mechanism that we've been watching and that GAT has been telling us about and Ted Butler's been telling us about and so on for decades seemed to be broken in the sense that prices just continued to get stronger and stronger. Every bounce was met with more buying, and up at back when it was holding strong over 30, over 31, over 32. And then it seemed like there was some faltering, and we see lots of mainstream financial press coverage saying that the Chinese have paused their bullion purchases, waiting for lower prices, which is interesting because it seems that the bullion bankers, who we've been told have the greatest concentrated short position in the history of the world, would have been in a world of hurt if there hadn't been an opportunity to exit that at a lower price. So it seems like all of a sudden, some pretty powerful players maybe decided that, at least for the moment, their interests were aligned. If the Chinese wanted lower prices and JP Morgan wanted temporarily lower prices, etc. Could you give us your take on what's been going on over the past month? I don't know. I know we don't know the inside scoop on all of this, but what it looks like from the seats where we're viewing it from and what your intuition is telling you.
I mean, yeah, you could play the optimistic side and say they went to him and said, "You need to let us get out, please," and worked out a deal. And look, this rinse, wash, repeat strategy that the commercial banks have inflicted upon the money managers who are just stupid because it keeps happening for years and years and years. It's a rinse, wash, and repeat. The commercial banks will let the price rise. The speculators go long, and then they come in and smash it, leading up to options expiration, which then dashes the hopes and aspirations of the money managers who go short and sell their longs, and who takes the other side of that. It's the commercial banks, and the thing rinse and wash and repeat. But as I said, look, going back to before 2020, we never saw people standing or entities standing for delivery. It was a very unusual thing to see all of these entities and sovereign wealth funds and central banks and the others, as they were called in 2020, um, standing for delivery. When these exchanges were designed, they were never designed to be delivery mechanisms, but that is indeed what has happened. And going back throughout the years, these countries who are standing for delivery, like China and India, to name a few, weren't core.
We seem to have lost Andy's feed. Let's see if we can get him back. Hold on.
I'm here.
Okay, continue. Go ahead. You said, and India, perhaps.
Yeah, I'm sorry. I didn't even know I left there. So, anyways, bottom line is these countries were not able to or had any desire or were really coordinated or cunning or wealthy enough to stand for delivery. And now they are. And that's exactly what I think has been the fly in the ointment of the Western commercial banks, who have been naked shorting the heck out of gold and silver for a very long time. And maybe indeed that is what happened. I don't know. I mean, look, I'd say this. I find it silly that the Western media comes out and says all of this stuff. I don't care what the paper said. I think it's fair to say that no one knows how much gold really anyone owns. I mean, supposedly the United States has 8,133 metric tons of gold, but when was the last time that's been validated and verified? And my whole career, everyone said the amount of gold that China owns is way understated. And we were just talking about this from the perspective of the IMF and a lead analyst for Bank of Montreal who said the same things just a few weeks ago, that they way understate things. Look, there are people that will tell you that since the beginning of the century, since 2000, 2001, 2002, that China's been accumulating anywhere between 1,000 and 1,500 metric tons a year, plus mining between 400 and 500 metric tons a year. So how is it that we're supposed to believe they only have 2,600 metric tons? This is why Alistair McLeod will tell you that they have more like 40,000 metric tons. And others would say things that are similar. At the same time, you have banks like ICBC and others in China that are state-owned banks that are by proxy accumulating metal on behalf of the PBOC, and that is not reported to the IMF, nor is all the metal that they produce. So I don't really buy it. But it's amazing what a little rhetoric and lip service by the mainstream will do, or even by the IMF, and maybe some suppression by COMEX, hoodwinking the managed money into maybe just one more time going short and allowing them out of these short positions. I don't know, but I'll tell you that, you know, these banks are working with the refineries in South Africa and in Switzerland. That stuff's not reported. If gold is not of 9995 quality, it's not reported to the IMF. So there's a lot of stuff that's going on that just isn't reported. And I don't know. Then again, I don't know how much I believe it, to be honest with you. But I will simply say that it's certainly, if you wanted to take an optimistic angle on it and say that's exactly what they did, they worked out a deal to get them out of these positions. And maybe that's what is happening. I don't know. But again, this is just a correction within a primary trend. I don't put a ton of stock into all of this rhetoric, but what I will say to you is that I don't believe the Chinese are being honest with anyone as to how much gold they own, and nor are we. For that matter, why would we not have audited Fort Knox when Ron Paul asked for it? Why was it voted down? Why did it take years to give back the bars to Germany?
Germany, yeah.
There's a million things that you can point to it, and to take that at face value, I think, is silly. And it's not like the Chinese are making it easy on anyone either. I looked at the close yesterday at the Shanghai Metals Exchange. Silver is $33.44 an ounce. It's $4 higher. So whatever is going on that's driving the price down, maybe it is one last push by the commercial banks to try and get out of their short positions before this goes crazy. Because I do believe that we are entering a new system where gold and silver and all of the world's commodities are being viewed at differently by these countries. And I don't think we've seen a change in anything, quite frankly. To think that, I think, is silly.
There's been a number of, I wanted to focus on the bank stress portion of this, and there's a question from the viewers. John says, many banks are not doing well under stress testing. Andy's thoughts. To put some more with that is we've heard for quite some time from Alistair, a former bank director, and others who are watching the banks closely, that their bond portfolios are heavily underwater with the interest rate raises that happened over the past year and a half. Also that their commercial loan portfolios are looking toxic because now with higher interest rates, with 40% of companies on the on the Russell 2000 being zombie companies, they can't even pay their interest on their debt, that they are no way going to be able to refinance those corporate loans at higher. And we've got corporate, real estate empty all over the country, et cetera. So we knew about those two major stresses on the banks, bond portfolios being underwater and corporate real estate, corporate real estate loans. But then the third one is this potential bullion pressure as well. So it seems like there are a lot of vectors of strain on the banks. And any of your thoughts on that in that regards?
Yeah, 100%. I think, they're not just like the banks aren't, or the central banks aren't telling us how much gold they have. I don't think the FDIC and the Fed is telling us just how grim the situation is with the banks here in the United States. They're massively undercapitalized and very much over leveraged. And ultimately, I see rates going higher. I might be a minority that sees rates going higher. If you see a short-term pivot by the Fed the next meeting or that one after into the election, it's highly politicized, of course, but it doesn't mean anything. I mean, if the budget was balanced today, how do you pay for all the unfunded liabilities that exceed, $200 trillion? How do you do that? And you take a look at this commercial real estate, and it's turning into an urban doom loop. If you ask me, it's not getting any better. It's getting worse. You have people moving away from the cities just as things are starting to get worse. And then things get worse because more people moved away. Declining services and quality of life, it pushes the residents out and leads to a self-reinforcing exodus, this doom loop. And I think that is happening when you're seeing these buildings that are selling for massive, massive, massive losses. It's just beginning. But the corollary effects, when you look at all the small businesses, people aren't talking about the fact that, yeah, they hold all of the regional banks hold all of the 70% of the commercial real estate loans. They also hold 70% of the small business.
We're having another pause in your stream there, Andy. Not sure what's holding that up. Let's see if we can get him back again.
Things are we're being lied to. And I think that I wish inflation was only 3%. I think it's much higher than that, but that's putting strain on the small businesses. And I think this will get really, really bad. And it will only take one really big event to wake people up. We've talked about before, that the bail-in legislation, while it hasn't reared its head yet, it is there. And if you have 65 banks or whatever they told us that are on life support, I mean, what's going to happen if 3 or 4 or 5 or 65 of them fail at once in the face of real big problems in commercial real estate? What, $1.5 trillion coming due to be reset at much higher rates here within the next 12 months or less? You have failure in all things and failure of trust in all things, including the banks and the markets. And I think even the statistics that we are being lied to, people are realizing that this isn't real. And so, yeah, having money in banks right now is really, I think, never been more dangerous. And no one really understands, I think, how big the systemic nature of all of this is. When you take a look, and I keep mentioning the third largest building in St. Louis, 44-story tall building, AT&T Center. It sold for $205 million in 2006. It just sold for $3.7 million. Now, that's just one example. How much more of this can happen? I saw UBS just took a massive hit on a bank in New York City. Hundreds of millions of dollars they lost. How many more of these can we take? And yeah, I think it's interesting. Everyone would run in years past out of the commercial banks, the big ones, because of their derivative positions, because how leveraged they were, and would go to the regional banks. And we find out the regional banks are in worse shape than the commercial banks. And now we're being told that these big banks, the big commercial banks, they're not stacking up well when measured against whatever stress test or metrics that they're talking about, this living will, whatever the hell that means. But all I can say is that I think it's a fool's errand to believe that we are out of the woods with the banks yet. And just wait. One bank gets bailed in, it creates a snowballing panic. Mm-hmm. And this is why I believe a lot of this stuff is you can argue that it's almost, this is what they want to do. They want to cull the banks. They want to get to a point of bringing down the number of banks to issue a central bank digital currency. If that's indeed what they want to do, then yeah, the final chapter hasn't been written yet. And the American public really has no idea what's in store. Your listeners are very well informed, but I think when the people realize just how unstable and fragile the whole ecosystem is, and I'm still amazed. I talk to a lot of people that are still buying CDs in banks, locking themselves up for a year, earning less money than you can get, going into U.S. Treasuries or even a money market with daily liquidity. And so the majority of people, even people that are sophisticated and well-read, reading the wrong things are not in any way, shape, or form prepared to get out of the way of what they do not see coming. So yeah, banking problem, I think, will give us some more surprises in the coming weeks and months ahead.
some of the things that are going to underscore what you just talked about. You called it this doom spiral, I think, on commercial real estate, et cetera. The flight from the cities in many of the cities in the U.S. Is becoming critical. Over the last few years, we've seen for especially where there's been policies enforced, where telling police to stand down. Attorneys general saying they're not going to prosecute entire swaths of types of crime like looting and property damage and shoplifting. You talked to us about that a few weeks ago, but some of these locations have become not only unprofitable but unsafe for people to even go into the commercial. So they've got corporate buildings in there where people are having to step over hypodermic needles. They're afraid of fleas and plague in some of the cities out west and out east. Some of the bigger cities, they're abandoning their corporate offices because it's an unsafe and undesirable place for people to even be their workers, professional workers. And secondly, swaths of retail outlets, whether it's Starbucks or whether it's stores or other things, even fast food restaurants, et cetera, shuttering their doors, many hundreds of locations because these places are getting boarded up. There's rioting, looting, and shoplifting, and just rampant loss of rule of law. We're going to be interviewing this week Sheriff Grady Judd from the Polk County, Florida sheriff, who's been on national news several times talking about why the crime rate in Polk County, his county, the fastest growing county in the United States, is half the national average. And he attributes it to maintaining a rule of law as opposed to abandoning the rule of law in all these other cities. So, a lot of these cities are being replaced by tent cities. People just don't want to go down to those
Well, and
those
think of
shopping
all the
districts
money
anymore.
that those people in vibrant times would have contributed to the local economy. Before I left Minneapolis, and downtown Minneapolis was a ghost town when I left. I haven't been back to see what it looks like lately, but on Nicollet Avenue, you remember, you used to live there, and they would have food trucks lining up and down the street all week long for all of the people working in
Mhm.
downtown Minneapolis to use bars and restaurants that, after the riots were boarded up and burnt down. I was just in New Orleans just the other day, and I was really saddened, and I don't want to get overly dramatic, but it was it was bad. The downtown area itself seemed deserted. Many places boarded up. A couple streets just next to the French Quarter where, bars and restaurants seemed a little bit lively, but I would not want to be walking there at dark and in broad daylight. I'm in the French Quarter with one of my daughters, and noon, 1 o'clock, a guy that was really, really messed up on something walked up to my 17-year-old daughter and threw up right in front of her at her foot, looked her in the eye and puked. I mean, and this is the kind, and obviously this isn't something that was really threatening. I felt bad for the guy, but this is just emblematic of some of the things we're seeing in these cities. So
Mhm.
if you have a business in these cities, and you have what appears to be a ghost town, and everyone's gone, and you don't feel safe, your workers don't feel safe coming there, what happens to all the establishments that came up around it? And this is the doom loop that it just feeds upon itself. I am one of those people who voted with my feet. I used to tell my wife I'm never leaving Minneapolis. I mean, I would say, look, this is my roots, my family, my business. Can't leave. But I did. And it's because Minneapolis became a place that I didn't recognize. No, maybe it's come back. I mean, I hope so. I my corporate entity still there. I go there from time to time, but rarely do I go back down into the city, stay out in the suburbs. But this is, I'm just one piece. Now, you look at what's happening. This is last week when I was on your show, or 2 weeks ago, we talked about Michelle Wu, I think is her name, something like that, the first female and Asian American mayor in Boston, who is trying to decriminalize all of these crimes, including breaking and entering into a home if it's vacant, meaning you're on vacation. As long as that person wanted to sleep or get out of the cold, they won't be prosecuted. So you come into your home after being gone for 2 weeks, there's someone sleeping in your bed, and it's okay. Amongst other things,
Mhm.
shoplifting,
Mhm.
drug
Mhm.
possession, even with the intent to distribute, driving with no license or after revocation, all these things. And this is the way we're going, and you wonder why we're seeing this stuff. And I don't blame, these people for pulling up tent and leaving these big cities. And you look at the way the politicians say what you want about whatever side of the aisle you're on. What happened in this case in New York City with former President Trump was awful. And what they did, it was a disgrace to the judicial system. So, I mean, you look at it, if you're a New York resident saying, there are people going around getting slashed in the face and women punched in the face in New York City over the last 10 days. Been reading about it. Come up, slash you, punch you, and leave. Run away. And yet we spend millions and millions and millions and millions of dollars going after Trump for stupid things in what to me seemed like a travesty of the law, the way that the judge handled it. And yet we allow the city itself to fall apart into a crime-infested city that's lost its bearings. And you wonder why people would want to leave these big corporations. And if they can do it to a former president, well, they can do it to anyone. And I think that's kind of the feeling. Listening to Judge Judy, who's not a Trump fan, talk about this the other night. I saw her interview, and it was eye-opening. And she just said that this was just someone who was a judge her whole life was heartbreaking. It was a travesty of everything she's put her faith in. And this is a part of the big picture why we're seeing these cities do what they're doing and become what they are. But then you look at the fallout. Everything is on credit. All of these companies and the banks and the small businesses and the loans, it's on credit. Someone's going to pay the bill when you have this mass defaulting and this mass exodus into places like Polk County, or where I moved into Palm Beach County. I'll take it 10 times out of 10 over the stuff I've seen in Hennepin County and Minneapolis.
Another thing that's happening is the lying and hiding of the truth about the true intractable nature and the accelerating nature of inflation. There's that famous quote about grinding the middle class between the millstones of taxation and inflation, and people are
Lenin.
feeling it. Yeah, Lenin. And well, it's debated, but anyway, right after he met with Lenin, then somebody else said it. So, but anyway, the point is that and this was just brought out in some testimonies in front of Congress, was that the rich do pretty well in inflationary times because they own the assets, whereas the poor, the working poor, and the middle class just do get ground up because they're depending on their purchasing power of things. They aren't the landlords, they're the renters, etc. So their cost of living goes up and up and up. One of the things that is the hiding of that, shrinkflation is one, but I just in the past 2 days, testimonies, and guys share in the text if you've seen this too. Today, two places, both our accountant and also our car fix-it shop, both said we're going to have to tack on the service charge if you're going to use a charge card, you're going to pay the 4% upcharge for using a charge card. The convenience fee is.
And they're the small business owners that are getting crushed.
Yep.
And that's exactly right. And you look at, they say that they're going to get inflation down to 2%. That's just hogwash. Most of the last 30 years, they weren't at 2%. And if we believe things are at 3%, ask yourself, how the hell is it that we created $11.5 trillion since 2020, just on the national debt? I mean, just since 2020, it was 23 trillion in 2020. We're now at almost 35 trillion.
Mm-hmm.
We're adding $1 trillion every 100 days. And there's some people saying that number is actually closer to half that amount in terms of $1 trillion every 50 days. But that's, I can't back that up, but I've heard people say that to me. And then we have 200 trillion or 150 trillion in unfunded liabilities. So balance the budget today. How do you ever pay this off in a rising interest rate environment? You don't. And so I think it's a pipe dream. Everything they've told us is a lie. There was no inflation. Done again, okay, fine, it's transitory. Okay, I guess it was structural. They've been wrong about everything. The subprime crisis is contained. Done again, I guess it's not. And there's going to be 4 rate cuts for sure this year. Done again, maybe there'll be 1. Probably not. And they've waited so long, they've already screwed that up too, because if they do it now, it just reeks of political, grandstanding to make things look better. But inflation is not going away. It's just not. And when you realize that the people or the countries that have been funding our way of living are moving elsewhere, I guess we're supposed to believe that the UK, who has their own problems, Ireland, who have their own problems, the Cayman Islands, these are the countries that are the biggest purchasers of our treasuries. Well, Jim Willey, who I respect an awful lot, I don't know where he gets his information, but he has some very interesting takes on things. And he believes these countries, which are Western allies, are being paid under the table by the Fed to go ahead and buy our treasuries to keep the ball going. Or maybe it's the fact that Japan is collapsing and their currency is collapsing, and those wealthy Japanese are doing all they can to buy U.S. treasuries, dollars going higher against the yen, and treasuries paying a yield as a life raft. Whatever it is, the impetus for owning dollars and treasuries is not as pure as it once was, and in fact, it's polluted. And I don't think there's anything self-sustaining in this. And I don't think inflation ultimately goes away for a very long time. And I think rates ultimately go much higher. How the heck do we pay for all of this stuff in this environment? We don't. And you do it by monetization of assets, or the Fed being the buyer of last resort, and being the only one silly enough to purchase these treasuries. So inflation's not going down. And even if we believe their nonsense, we're still, over halfway away from where they want to be. They want to be at 2 or at 3.5. Well, they're a long ways away from that. So why lower? And if you do, what does that do? It just reignites the inflation engine. And ask yourself, I mean, like I said, I went to Las Vegas for a concert. By the way, you got to go see the Sphere, all of you. It's the most incredible place. I ordered a cheeseburger at the Wynn, and it was $75 delivered to our room, a cheeseburger, French fries, and a Coke. It's an expensive hotel. Great cheeseburger, maybe the best I ever had, $74. So inflation is not going away. It just isn't. And I think that means ultimately rates have to stay high in order to find buyers to continue to buy our treasuries and to finance our way of life, because the fiscal irresponsibility is not going away at the level that we are creating debt at 100 days, $1 trillion every 100 days. It's not going away. It's getting worse. It took 200 years to do it the first time. We're doing it now in 100 days. And in just 4 short years have added $12 trillion to the debt. It's just insanity.
That's we have a comment here from Sarge 27271 who says that's why the East has been hoarding like it's going out of style. Can you talk to us about what we do know about the physical accumulation? And if you can recap for those, because there were some questions after you mentioned the news story from a couple of years ago about Germany waiting and struggling and being unable for quite some time to repatriate some of their gold. So both of those, that this is not new. It's been going on and it's been difficult, but it's happening. And the gold and the precious metals physical flowing from west to east, just to remind those who haven't been keeping score.
Yeah, I mean, that to me is as big of a deal as anything. I mean, when you talk about, it's not just the accumulation of gold, right? And we go back to 2017 when the Bundesbank, they tried to get their gold back starting in like 2013 or 14. And in 2017, they made a huge stink about it publicly. They said, look, we demand our gold back, send it back now, for goodness sake. And they, it took them years. And shortly after that, we saw the Bank of Austria, Hungary, Turkey, Poland, the Czech National Bank, the Dutch National Bank. But this is something that's been going on and on and on. We saw just this year, the first 4 months of the year, India bought 1.5 times the amount of gold that they bought all of last year. But at the same time, they repatriated 100 metric tons from the Bank of England, i.e. the London Bullion Metals Association. And then we saw a few months ago or a few weeks ago, Nigeria, South Africa, Algeria, Ghana, Senegal, Cameroon, Algeria, I said that already, Egypt, Saudi Arabia. They all did the same thing from the New York Fed, i.e. the COMEX. So what you are seeing is the removal of counterparty risk. And I think that this is an indictment of the whole system, that we don't trust you even enough to allow our metal to be held by these governments so that it can be easily traded on the 2 major hubs for now of trading. And I talked a lot about this, this pattern that we're seeing of delivery off of COMEX. A lot of people don't know that in 2015, the CME Group, which is the COMEX, created a contract, if you will, that allows for metal to be delivered. Bars will be bought on COMEX and delivered in China to Brinks, Hong Kong, which is a COMEX facility. And when you realize that typically what's traded on COMEX is 100-ounce gold bars, it's interesting. They have a mini contract also that uses kilo bars. So 5 weeks ago, 243,054 ounces, divide that by 32.15, you'll get 7,560 kilo bars, or $571 million worth of gold was delivered to Brinks, Hong Kong. Why kilo bars? Well, that's what they trade on the Shanghai Gold Exchange. And over the last 75 days or so, we've seen demand increase over 200% on the Shanghai Gold Exchange. When combined with the Shanghai Futures Exchange, it is actually outpacing the volume done on COMEX. It's now the second most active futures market and gold and silver hub, where the Shanghai Gold Exchange is cash and carry. The futures exchange is got futures, but the combined volume surpasses COMEX now. But here again, we just saw the June delivery contract for gold. There was, let me just see, I think it was I want to say 3,000. How much left? There were 30,000 contracts in the June delivery contract delivered in gold here just recently, 30,000 at 100 ounces apiece. Was that 3 million ounces delivered? Where'd it go? Who's buying it? So when you talk about what's happening, we are seeing massive accumulation. We are seeing it being done in a less than transparent manner. And the common denominator is removal of counterparty risk. When you see all of these countries, including Saudi Arabia, remove their gold from the New York Fed and the Bank of England, when you see India for the first time since 1991 bring all their gold back from the Bank of England, it's an indictment to the West and the lack of trust, counterparty risk. And this is a big deal. It's every bit as big as the rampant accumulation, because these exchanges were considered pristine. There will come a time, it was like Bernie Madoff ran a good ship until he didn't. You know, everyone thought it was great to be with Bernie. He started the NASDAQ, so prominent, so prestigious. And then people said, oh, Bernie, I need some money back. Oops, problem. Well, what happens when there's a crack with one of these Western banks that are rehypothecating a gazillion times, where there's, you know, the London Metals Exchange claims they trade 20 million ounces of gold and 292 million ounces of silver per day. But they're admitting that those numbers are 10 times understated. So that's 2.9 billion ounces of silver and 200 million ounces of gold per day. That's all naked, right? So what happens when there's a failure to deliver? That's what the whole idea was behind these banks showing up in Shanghai, begging for help. Who knows what happened there, but it's ironic that the silver stockpiles of Shanghai went straight down from that day that Deutsche Bank was the first of the 4 banks to show up in second week in March. The inventories are down to their lowest level in years at just around 700 tons. So removal of counterparty risk, massive acquisition, doing so in a less than transparent way. It's exactly what's happening. And there will come a time where there is a delivery failure. And that's at some point when these exchanges become Bernie Madoff and price setting mechanism moves to the part of the world, like the chairman of the Shanghai Gold Exchange said in 2015, that when China's allowed to speak at the gold table, the real price of gold will be determined, or the real price will be revealed. They understand the new BRICS grain exchange. They said, look, we're the ones who produce and accumulate all of these commodities, but the price is set on COMEX. And so whether you're talking about precious metals or base metals, you know, they just bought the LME, the London Metals Exchange, China did. They're playing the long game and we're not. And we're focused on the wrong things. But what they are doing is using any angle they can in price, in rhetoric. Yeah, we stopped buying for a while. Yeah, nonsense you did. We're just buying it, not telling you about it. And the price drops because that's what the banks want. And maybe they're trying to dig out and fool the managed money into one more time taking those short positions. I don't know. There will be a one last time, but there will come a time when Moscow, when Dubai, when Shanghai, when these exchanges take over for the West and provide real price setting where price discovery becomes real. None of us know what gold and silver really should be because of the Western suppression, which has destroyed the price discovery process for a long time. I believe this in my soul. And it gets frustrating when you see this. I get it. But take a step back. I mean, is the world getting any better? Or are they just, is the world just very, the world is doing all they can to keep everyone from understanding the truth. There's just not enough gold and silver. There's way too much money, and they don't want to let people in on their secret until it's too late. But if it weren't happening, why would the BIS reclassify gold as tier one? Why would the central banks buy it the way they did? Why would they repatriate it the way they did? And now you get talk of the new unit currency coming out of the meetings in Russia that are indeed saying, the head of the BRICS New Development Bank said, yes, the new unit settlement currency will use Project Mbridge to transact local currencies with one another and settle in a basket of 60% currency, 40% gold, the only tier one asset that all these banks are buying. So if you think it's going to be smooth the whole way up, so these banks can quietly accumulate all of this metal, think twice. They don't want us to know what they're doing because we would crowd them out of their trade. So they're going to do all they can to misdirect. I think that's what this is on a big scale. I don't know who's behind it or how deep it goes, but I would say to expect it to be transparent is foolish.
Looking down the road a little farther, Bruce asks, some people think that gold will be the big winner and silver not so much come the new world order. And what would your comment be on this?
I think I've always been pretty consistent on that, saying that if I had one trade to make and only one, it would be gold because it is the only other tier one reserve asset. I know people don't want to hear that. I would still simply say that silver is the most undervalued asset on the planet, and it will do very, very, very well. I don't know if it has the lasting power of gold. See, I think gold will be pegged to a new system, never come back down. It will be pegged. Gold is held in central bank balance sheets in something called the gold revaluation account. They will revalue gold and tie it to a system. We've already been told it will be tied to the new BRICS currency. Silver and gold have a 90% correlation done again through all of history. As one goes, so too does the other. I think silver is the trade of a decade, of a generation, the value, but it won't be easy. And I think if I were being completely candid, when that ratio corrects, anywhere into the 40s, I start trading into gold. Doesn't mean I'm not wholly bullish on silver. I am, but I think that there comes risk with it because, look, it's not like it's not being accumulated. India's bought 650 million ounces in the last 2.5 years. That's 10 times the registered category or more. On COMEX, the LBMA has 800 million ounces total, of which 500 belong to the ETFs. That's double what they have to play with, 300 million supposedly, if we believe them. But we know that they're trading between 200 million and 2.9 billion ounces of silver per day. So how much is real? Yeah, so I think that silver will do just fine. But if a genie came out of the bottle and said you get two trades, it would be buy silver and switch to gold when the ratio corrects. If they said one trade, I would probably buy gold, even realizing that it does not have the value or the potential in any way, shape, or form that silver does. But that's a calculated speculation.
We have a question from David Ottenus. Could you give us a little more detail? You've talked about it in the past, but this Mbridge settlement mechanism that the BRICS are talking about using to be a functional workaround for not needing to use the US dollar for settling cross-border trade?
It's a big deal. It's a very big deal because what it is, it's a platform that will allow for cross-border trade using local currencies, central bank digital currencies. Saudi Arabia became a full participant on June 5th, according to Reuters, and it's a platform that's been designed years ago. It's not just brand new. It's been a collaboration between China, Hong Kong, United Arab Emirates, and Thailand, I believe, either Thailand or Singapore. But it's a way for countries to look, how do we impose sanctions through SWIFT? I've been saying for a while now that I think the gold has replaced in many of the eyes of the central banks, the treasury market. It's doubled the performance of the 10-year treasury over 25 years, does not have the counterparty risk. This is why you see the buying and the repatriation. And I find it interesting. I'd say the same thing about oil. That big airport in Iran that is being modernized by China for a few $billions. They're paying for it in oil. Gold and oil are being remonetized. And the first two trades that the Mbridge did last year, test trades, were digital yuan with UAE for gold and oil. And I think that's exactly what will will happen. But what basically was said at this meeting in Russia is that all of these countries will trade with their local currencies, so they have autonomy. They don't have to have one common BRICS currency. They'll have their local currencies that they'll have to be diligent about maintaining value, and they'll trade with one another in the local currencies and settle in the common settlement currency, which will be gold and a basket of the local currencies. But this Mbridge is a way, basically, think of this as being SWIFT, and here's the Mbridge. It goes right over it. Doesn't have to deal with SWIFT, but it's interesting that they talk about the ability to integrate. That's not saying that right. To
integrate.
Thank you. I don't know why I was having a hard time with that. Integrate other systems, including if they wanted the SWIFT, but it can integrate with many systems, with XRP, with all sorts of systems. They talk about how it is widely flexible and it has expansion ability. But the bottom line is all of these countries will keep their autonomy. They will trade in local currencies, and they will settle over Mbridge and then settle in the common settlement currency, which will be gold backed by 40%. Kilo bars that won't be rehypothecated, that can be deliverable, is what I have been told. And so, look, Mbridge is a big deal because it allows these countries to trade freely without having to use the Western intermediary banks or the SWIFT system, which is the tool of sanctions. It's a huge deal, huge deal. When you see Saudi Arabia become a full participant, it's even bigger.
I wanted to give a quick chance for us to recap on the specials, which are carryovers from last week. I'm going to pop them up real quick so we can hit them, because some people can't stay the whole hour. So here we go.
Yeah, and even though we have these up here, the ITAL Preziosi bars, I would still say the best value is pre-65 silver. That should be the special. And we're talking about trying to get a special out tomorrow night for the rest, preemptively, if you will, for
4th of July?
4th of July in mind, but also the debate. And it will be American centric, maybe junk silver, maybe pre-33 circulated coins. But in an environment where, what we've seen lately is all of the backdated coins start to disappear. This is the beginning of tightening. And so premiums on the coins are higher. If you're looking for a massive bang for the buck, it's this. I don't have a problem with the kilo bars. I will be very honest and say, if I had my choice, I would own coins. But, if people are looking for the biggest value, and sometimes if you're looking to do this gold to silver swap or silver to gold swap, it might make more sense to get more ounces than the form. This is good because they're small. They're about the size of an iPhone. They're 32.15 ounces. So they're great. I like them a lot. They are on special, and we hope to have a new special that I will send out to everyone, including you, hopefully tomorrow. And the 10th ounce platinum, there's a lot of talk right now about the value found in platinum. It is ignored. And it's interesting, if you're going to trade barter or hold coins that are tradable, I think these are very neat. You hold them in your hand, there's unquestionable that they are indeed platinum, and the way they feel and their functionality. I don't know. I think platinum's a forgotten metal, and it's, I don't know, 10, 15, 20 times more rare than gold. And for most of the last 100 years has been priced much higher than gold. It's an anomaly that we've been in with both silver and platinum for the last several years. So I do like these as well. But I hope to have something truly special to offer in the next 24 hours or so, to supplement all of this as well. So I apologize for sticking with last week's special. It's kind of a cop-out.
Not a problem. There's been remarkable, I I think the low premiums on the junk silver, the dimes and quarters, is really astonishing because when people became kind of awakened, I think during the COVID crisis and the lockdowns and invasion of Ukraine and this, we've had multiple waves, bank failures. People gravitated to real forms of real money, and those emerged. The premiums on those shot from sub $2 up to $10+
Yeah,
per ounce.
they were the highest of anything other than Silver Eagles for a good amount of time. And, look, it's really interesting to me. Um, if you study markets, you see over and over and over again the big money positions in front of the crowd. And as the crowd has been selling things like junk silver, selling ETF positions, selling coins that resulted in super low premiums and massive availability of backdate coins, which is now dried up, you're seeing the biggest money in the world go on a buying spree and a repatriation spree. So when junk silver becomes very hard to get and premiums go higher, we're getting to that point where all premiums will start to rise. But it's really will go down as, I guess it shouldn't be a mystery. It's just part of the way that it always goes, that the little guy always is late to the game. And if I didn't see the central banks doing what they've been doing for quite some time now, and now the repatriation of it, I think puts an exclamation point on it, I would be less confident in these price pullbacks. To me, this is all orchestrated. It's all part of the game. And I will never understand why. I guess I do understand, but I wish I didn't. I guess the media doesn't alert anyone. You are the news, Dunnigan, and people like you, because it just blows me away that very sophisticated people don't see what's coming and haven't been accumulating gold and silver, and instead buy Nvidia and Apple, two of the three or four stocks holding this up with massive lack or the lack of breadth in the market is unbelievable. Where as you were saying, the Russell 2000, which is an indication of the economy, is collapsing, and so I guess Wall Street wants us to believe that the market is the economy, but it's detached completely and totally, and something will happen to wake people up. And I think when that happens, they'll do the same thing that we've seen them do over and over and over again over the last few years, an expansion into this industry, and like that, things disappear. But when you realize the biggest money in the world on a really high level has been doing this, buying it and bringing it home, removing the counterparty risk at levels the world's never seen. India buys 1.5 times the amount of gold in the first 4 months than they did all of last year, double the amount of silver in the first 4 months, all of last year, massive deliveries, taking possession. Don't you see? These countries have the playbook. These countries, when at the beginning, and you asked me to talk about those Eastern European banks that repatriated their gold, Bundesbank, Turkey, the Dutch National Bank, Poland, Austria,
Poland, Germany,
Hungary.
yeah.
Then they go on a buying spree the next year, buy more gold as a group than the 60 years previously combined, double that in 2019. And then miraculously, the BIS reclassifies gold the only other tier one asset. Really? You think that's a coincidence? These players and their friends, they know the playbook. So I think that's the most important thing to take away from what you see with the central banks, is that they know the playbook and they're using the rhetoric and the manipulation of the Western system to run cover, to de-dollarize and de-treasurize. I know that's not a word, but they are selling treasuries and replacing it with commodities which perform better and have no counterparty risk. And that's something that if you don't see that clearly, then this market will drive you insane. Instead, see it for what it is and understand it's a subsidy. And I know it's easy for me to say that as the owner of a metals company. It doesn't matter. I'm telling you, in my gut, in my soul, that's what I see happening. And it is an opportunity while there still is good availability before that changes again.
I just wanted to remind everyone of a scenario that my wife and I experienced not that long ago. The breakfast cafe where we like to go to, we walked in and it was way more crowded than usual. They had people standing outside the door, couldn't get in. And we asked the hostess, why aren't people getting seated? She says, well, we can't seat anyone because we can't let anybody leave. So what do you mean you can't let anyone leave? She said, well, our credit card processing system went down, and so nobody could pay. The few who had cash paid and they left, but most people don't have cash, so they can't pay, so they can't leave. And
Is that place called Hotel California? You can come in, but you can't leave. And yeah, but
but
that's a growing trend, and a move away from cash to this digital system. And here again, what happens if there's a problem with the digital system? That's a good example of it. And yeah, that's why I always have some cash on me. I hate the fact my daughters will say, "Can I have some money, Dad, to go out?" And I'm like, "Well, you can have some cash." No, can you please just give me Apple Pay? No, take it or leave it. It's like the people who I think, don't understand what will the convenience that we are getting by using digital money, what it means to lose cash, and you're seeing it. I mean, when I go skiing out west, Vail, which is one of the biggest, Vail Corporation, one of the biggest companies in America. I mean, they own ski resorts all around North America, including Whistler in Canada and all around. They own little dinky ski resorts in Minnesota, Afton Alps, but everywhere. They own huge company. They're cashless. The Super Bowl here in Tampa 2 years ago was cashless. They had reverse ATM machines where you put in cash and get out a credit card. This is a trend. I hate it. And I think cash is something that we should cling to, that privacy and that utility, and free from things just like that. But unfortunately, the younger generation would rather have. In fact, my buddy Kevin, his daughter calls it fake money. I laugh when she says that. Dollar bills are fake money. Really? So real money is, the iPhone and Apple Pay and whatever. I think it's just it's again another. Slowly, we are being indoctrinated into this digital system, and if we see again, like Fed Now, which, as we've talked about, was launched 7-8 months ago, and Lael Brainerd being the point person for it, modern monetary theorist, worked at the Fed, developed the CBDC with MIT. It's Venmo on steroids. It will replace checks and wires at some point if it takes hold. Instant settlement, just like that, bang. So we are being indoctrinated, and it started with Venmo and Zelle, and you could argue that the proliferation of cryptocurrencies, the acceptance of Bitcoin, is indoctrinating people into, a digital cashless society. Hope it doesn't happen, but you can see we're heading in that direction.
And if we got a lot of comments here. This really lit up about people talking about keeping cash on hand. And remember, folks, we're talking about layers of abstraction here, because as Andy points out, that the young generation is now thinking, Apple Pay, any virtual electronic method is the only way to pay. And we think paper cash is real, but as Robert Kiyosaki and others talk about, cash is trash, Andy. So maybe they're not wrong. They're just looking at it from the wrong end of the telescope here. But that the real asset, the way that people who are going to survive and thrive, you see this behind me, prepare to survive and thrive. People who are going to survive and thrive through the changes that are coming are those who are holding real assets. And in that case, it doesn't mean electronic digits, and it doesn't even mean paper cash. After the first perhaps few weeks, there's been quite a heated debate among the preparedness community about how long confidence will persist in paper cash in the event of a real financial crisis where
Not long,
banks are failing.
but just long enough maybe to get some basic things. I don't know, but not long. And but it's the same thing. Who's going to be able to take your Apple Pay? The credit card processors are down. And then through all of this, now we start talking about a draft. And last year, the U.S. military missed its recruitment goal by 41,000 people. It's the lowest, smallest size active military since 1940. And it's the article I was reading said 77% of young people in America do not meet even the basic standards to join the military, whether physical, mental, or moral. And then you look at what's happening in the colleges where these kids are actually hating this country. They seem to loathe the country, and where you get the supreme leader of Iran coming out and saying that you students are part of the resistance front. And you look at the patriotic people. I have a lot of friends who are veterans who risked their lives in Afghanistan and Iraq. And these people are extremists. They're too extreme, right? Look, any strong country needs a strong military and a robust economy. Now ask yourself a question here. How strong is our military if it's the lowest it's been since 1940? And how much of our munitions have we given away? And how's that economy treating you? When we look at the Congressional Budget Office, the last nonpartisan group in Washington, say that in 6 years, all tax revenue will go just to pay the interest on the debt and mandatory entitlement like Social Security, which is 77 trillion in the hole, or Medicare Part B, 99 trillion in the hole, Medicare Part D, 22 trillion in the hole. Military spending is discretional. It means we'll have to borrow money from the rest of the world to fund our military. And so we have a problem here. And so I don't think people who are, you need to look at the big picture. This is not this path we're on is not sustainable. One way or the other, there's going to be issues. So, and then we do these things that are antagonizing the rest of the world. You ask yourself, what's going on? It's so distressing and disappointing to see what this administration is doing. And yet we're ill prepared on every level. The banks are ill prepared. The insurance companies are ill prepared. The commercial real estate market's ill prepared. Our military evidently is ill prepared. The consumer is ill prepared. 65% of America's paycheck to paycheck, 45% earning over $100,000 paycheck to paycheck. But inflation's great and the economy's great. Look at the stock market. So I think it's, people understand something's wrong, whether they can articulate it or not. And then you look at Biden. He is the president. I respect the office, but he's not well, and everyone knows it. And even the people who are supporting him, and it drives me nuts that you get these 40% approval ratings. Really, I'd like to sit down and talk to these people. How about the acknowledgement? Someone said to me, I heard someone say, if you were being wheeled in to have open heart surgery and you met Dr. Biden, would you keep going? Would you say, get me out of here?
Yeah.
Or if you were walking onto a plane to fly cross continent, to fly to the UK, and you met pilot Biden at the door, would you get on the airplane? And yet he's the leader of the free world. And I find it just to be insane. What's going on in this country? These things are not lost on the rest of the world. This is all part of this de-dollarization and move away from the West, repatriating assets that once were held in the most trusted place on the planet. Now they'd rather hold it all at home, forget how liquid and easy it is to trade directly from the New York Fed to the COMEX. Thank you very much, but we'll take possession. This is part of it. And then the inner cities and the breakdown and the doom loop and the commercial real estate and the banks. Do you see how this quickly spins out of control? I think to just focus on one thing is foolish. You need to look at the big picture and be defensive and only save the world one person at a time, starting with yourself, your friends and family. They'll get it, but not until it's too late. Don't damage your relationship. Try your best. Have pity on them if they won't listen to you. You won't convince them until they see it with their own eyes. But what are the big money doing right now? They're moving when no one sees it, using price and rhetoric to cover. Take possession. Why do we not hear about the fact that all of these banks are pulling their money back from the New York Fed? Why does there have to be a Freedom of Information Act from Mooney, who's no longer in office, trying to get that information? Why do we not know gold was reclassified tier 1? Why don't we know all of this stuff? But yet the central banks do, and they're positioning ahead of the curve while the rest of us are following the herd into the pen for slaughter, as it always happens. So I would compliment all of you out there here at 10 o'clock at night in Florida, listening to a knucklehead like me talk about these things, because at least you have an open mind and enough to where you take in information from all the people Dunnigan has on his show, and Dunnigan, and all of the other sources, and you make an informed decision. And I know most of you say, geez, I don't get it why my friends and my family don't get it. They all think I'm nuts. I've lived this for 3 decades. Everyone's thought I was nuts for 3 decades. But you know what they say, he who laughs last. I don't want to laugh about this either, because what's coming will be, I think, shocking to a lot of people and to the people that I love and care about. So hopefully we're all able to widen our community a little bit. But I think it's one of these deals where people aren't going to get it until they really get it. Now they're beginning to sense something, inflation and the craziness in the White House and the lawlessness and all this stuff. But we're not really there yet. The stock market would certainly not be doing what it is if we were.
Well, we're at the top of the hour, and I'm just grateful for everyone for being here. Hey, guys, if you haven't heard, our channel surpassed 100,000 subscribers in the past month, and YouTube sent us a lovely plaque. We did a special show with the
Way to go,
unboxing of it.
Dunnigan. Congrats.
We got this special plaque from YouTube for passing 10,000
Is
subscribers.
that made of silver or platinum?
Well, it looks like brushed aluminum, but anyway, uh, it's an honor to us, but it's really an honor to all of you who have made this possible and made this channel survive and thrive this long. And we'd like to keep bringing the news that you're not going to hear on any of the mainstream financial press, and people like Andy who are plugged into what's really going on. And you can be a big part of that by making sure that you forward this video to your friends, get them to sign up for our channel. Let's keep this growing. And remember, we're also on Brighteon, Rumble, and other platforms if you want to, if you prefer to watch us there, that's fine. And Andy, as always, on behalf of all of our viewers, just thank you for joining us this time for this live extended update on Liberty and Finance.
Pleasure is mine, Dunnigan. That's well-deserved honor. You're amazing at what you do, and it's an honor to be here with you and to call you a friend. And I mean that sincerely. I think that's fantastic, and my congratulations to you. I hope everyone out there has a wonderful wonderful holiday. Let's see, are we back next week, or is the 4th going to interrupt that? Let's look and see here.
We should be here. Yeah.
Yeah, we're here next week, and then
Yep.
the following week we can do it live from
Boca.
From Rick Rule's conference down here in Boca. So
Great. And I've heard from some of our subscribers that they're going to see us in Boca. So that'll be awesome to see
good.
some people.
Well, I know that I'm
shake their
doing
hand.
a lunch presentation on Tuesday, so sign up for that lunch if you can. And it's great to always come here and chat with you, Dunnigan. I appreciate it and look forward to picking up where we left off real soon. And you know what's crazy? I'm sure there'll be lots to talk about in the span of a week. So we'll look forward to see what's happened and talk about it. So hope you have a great rest of your evening, and everyone else out there the same.
Thanks, everyone. Take care.